So the markets as at Tuesday afternoon have continued their bullish breakout. The Dow Jones Industrial Average closing up 84 points today. It has been another very strong day's worth of trading. We closed more or less up at the highs on Tuesday. We have no reason at the current juncture to really expect this market to slow down or even reverse, given some of these candlesticks which just continue to develop. You can see on the Dow Jones Industrial Average almost another shaved flat top, once again showing us that the sentiment behind this market is exceptionally strong at this particular point in time. The S&P 500 continuing to the upside, up another 5.5 points more or less. A little bit of a lower wick, but we are still accelerating very much so away from these rising and also expanding exponential moving averages. You can see most recently towards the end of the week just past, we really started to accelerate and begin to breach above these old historical highs, which have been acting as a very short-term resistance area. So the markets again are collectively very healthy at this particular point in time. Now, as I fast forward into the NASDAQ, you can see over the past 2 days worth of trading, these two candlesticks have been a little bit different to that of the construction taking place on the industrial average and that of the S&P 500. On Monday, we have what we call a high wave spinning top. Again, not necessarily that of a reversal signal, but it is indicating a little bit of sort of indecision, so to speak, of on the NASDAQ. And that obviously sort of trickles down into our technology weighted companies on our individual trade list on the left hand side of my screen. Again, today during Tuesday's trading session, we were left more or less with a hangman at resistance. Now, although we don't have a definitive resistance area up and around this 6,500 area that we're currently trading up into, it is suggesting potentially a little bit of a slowdown. Now, again, we're going to have to monitor this as the week continues, but it is quite interesting to speak of because as I go through the top 12 individual trade list, I want to speak about one particular stock which is giving us a rather interesting signal. That is, of course, Tesla. Now, Tesla was in some form of a symmetrical triangle. Let me just very quickly illustrate this to you. If you just pay attention to that top resistance area and of course this rising support area, it was looking as though we were seeing a definitive break out of the symmetrical triangle. We were nearing the apex of the triangle itself. We broke out, we ran up into resistance up here at about 380. It did come as a little bit of a surprise to see this roll over and retrace back down, all the way down really to $340 per share. This is a very important area of support. It is also more or less the back test of the apex. So if I just quickly draw in that declining resistance area over here, not only is it horizontal support, but it is also potentially acting as a back test of the breakout of this symmetrical triangle taking place right now at the current junction. Now, obviously, if I zoom in on the detail too, if you pay attention to Tuesday's candle, this is a very bullish signal. It doesn't necessarily mean that, look, Wednesday through Friday, we're just going to accelerate and rally all the way back up to 380. But this is showing us that there are buyers, very much so a lot of buyers, and there is a lot of interest at Tesla around that 340 pivot. You can see on my screen also that volume did expand today. So we're seeing what we call an engulfing candle, a bullish engulfing candlestick at a macro area of support after 3 consecutive days of spinning top candlesticks, almost doji candlesticks as well. And this is the clearest indication that Tesla is giving us a signal that it is ready or on the precipice of generally oscillating back up into this resistance area at around $380 per share. So there is a buying opportunity at the moment on Tesla. It just did generate on Tuesday. So it's going to be very interesting, first of all, how Tesla trades throughout and towards the end of this week, but how it continues into the month of October. It wouldn't surprise me based on this candlestick just here at this location to see this in due course rally all the way back up to 380 and potentially even break above this resistance swing high that we established towards the middle of September 2017. Very similar to what we did over here on Goldman Sachs. We went through some form of a pullback back down into this macro area of support. We started to see the bullish candlesticks at the macro area of support. And then again, we went off to the races, ultimately breaking above its pivot towards the early period of August 2017. I thought it was important to bring that to your attention because this is a very strong buy signal which is just generated, so to speak, on Tesla. Now, if I take this also into the US dollar, I was speaking about this yesterday. I would encourage you to go and have a listen to that US dollar update, also the analysis of the US dollar and how it applies to that of the commodities, gold and silver in particular. But what we saw on really yesterday, Tuesday, was another spinning top candle taking place in this very important location. This is roughly the sort of the decision point, the very important pivot point as to whether or not the US dollar is in some form of a retest of this 93.50 up to 94 pivot, or whether or not we overshot macro support and now we're seeing a snapback knee-jerk reaction, which is going to take us potentially all the way back up to 100. Now, obviously, this is important because depending on what happens more or less in this box, it's going to set the stage for silver and also gold. So as the US dollar has somewhat short-term strengthened since placing in that short-term bottom to speak of, you can see silver has been very much so weak over the past 1 month, more or less. And also, if I bring up the chart of gold, you can see a very similar type of picture taking place. In fact, it was looking a little bit healthy during Tuesday's session. We were at some particular point anyway, we were closing up towards the high, obviously, of this candle, but it has left us with another upper week, which is again showing us continued weakness in the gold and also silver markets. That is largely to do with the US dollar. Now, as long as the US dollar doesn't retreat materially more or less below our pivot over here at 92.76, we expect commodities to relatively be weak. And again, if the US dollar appreciates above this box, it's going to be and give us significant headwinds for that of higher commodity prices moving forward. All right. So I hope that helped you as at this Tuesday evening as we transition into Wednesday's day's worth of trading. If you have any questions, email me success@pivotpoint-trading.com. Other than that, everybody, it's James signing off on behalf of Pivot Point Trading. All the best. Farewell.